Welcome to Billionaire. This is Raghu here. Hope you had a good expiry. So today I'm just going to make a quick video so that you know the levels, and before that how much I made. This is the amount I made in first three trades, and then this was in single lots. I was trying to experiment something and lost. So this trade was taken in the first 15 minutes inside bar. Now before we go for analysis, for people who just joined to understand the levels, so these are the levels for tomorrow. So there is a very interesting view for tomorrow. See if we can observe. Nifty has formed narrow CPR. What do you mean by narrow CPR? Narrow CPR means when market goes down, comes up, and it gets stuck in a range. It's a narrow CPR. This means that buyers and sellers are undecided which side market needs to go. Remember, we had a pretty big gap down, and after gap down, we did not see the continuation of the momentum downside. Instead of that, it took support at the previous buying area, which means these previous buying area are acting as buying, means there are some people left who thinks it's a best value buy. Why? Because of this. So I will make the time go to 30 minutes so that you can see it. I've been showing this for last 2 weeks. Market is moving in channel. So this is the channel. So in this channel, since December 20th, market is moving in channel. So market price is within the channel. Before it reached the channel, it identified the previous buying area. Remember, this is a very long wick. So this entire area will be acting as a buying. Market bought there. So you need to understand. Now tomorrow, if this channel gets broken, along with this is tomorrow's CPR and pivots. Tomorrow's R1 is 17,810. Tomorrow's S1 is around 17,667. So assume that R1 and S1 is broken. Then you need to anticipate. So there will be a minor, see this is again a buying area. But when this buying area is broken, it can act as a resistance, but still it's a minor area. You can copy it because even the narrow CPR means it can also be a very tight trading day because people are indecisive. FIIs after vacation, everyone are entering and they want to watch and observe which side they would like to move the price. Where is the value buy? This is how the supply and demand works. This is how pivots works and price moves. It's not because of uh, pure price. It's because buyers and sellers collectively make the decision. So this level you can mark it. 17,810 to 823 is a minor resistance, although it is a gap. But if this is taken out, you need to anticipate price can go up to 17,880, right? Because it is all buying area. From here, it will be a buying area. Thus, likewise, if S1 is broken, you need to anticipate price to move to 17,600 range. Although sometimes what happens is when we mark wick to wick, see, this is again a buying. 17,613 is buying, 604 is buying, and 17,500. There's around 25 points. But why we mark it this way is market is not absolute. So this week and this week we mark. Okay, you can mark this level also if you want to take the target where you want to remove. This entire area will act as supply area where buyers will be waiting from 616 to 594. So you can watch pivots. Tomorrow there will be pivots formed. If S1 is here, S2 will be somewhere here. So you can watch the pivot or Camarilla and trade. These are the levels which price moves. Why I'm telling these levels will work is because of this. So yesterday I marked these levels in front of your eyes, and if you've seen where did the market open, it opened this. I said it's a resistance, strong support. So it gapped down inside the support. When the support is broken, it acts as resistance. From here, see how price moved, took support. Each level you can see price reacting. The better way to see is when you move to 5 minutes, you will see the levels. So top one you remember. Okay, I'm going to remove this Bollinger Band. We don't need it. Resistance comes down to next level. You see buying happens. This gets broken, comes almost close to this resistance, goes up, comes take support here. Take support here, pulls back. See resistance, resistance, then goes back to the high. So these levels, whatever I'm giving, It works because majority of the price action traders mark the same level and watch the same level. But remember this channel. If this channel gets broken, you need to anticipate a lot of people will be watching this and there will be a strong momentum which can take it to this level. And if this level is broken, next level is 17,516 to 500. So you have 17,600 and 17,600 is convincingly taken down, which means price will sustain below it. Then 17,500 is coming. Likewise, if the high is broken 17,810, then 880, 890 will be coming. After 890, you have a congestion zone. Usually here, when market is here, it will be a gap up or you need a lot of strong buying to remove this. Now in this area, if you go to 15 minutes, can I mark any areas? No. This is sideways market. So until here, it will be anybody's game. Market can reverse at any point of time. So above 880, 890, market can go up to 17,930, 945. So you can watch the pivots and trade accordingly. So hope this helped. And if you want me to analyze Nifty, I can quickly analyze it. So let me remove. Okay, I'll go here only. Wait. Was there any signs for you to take the reversal trade? I have told you below S4 is a breakout, anticipate a breakout. This is Camarilla pivots, by the way. This is previous day low. Below previous day low, above previous day high, below S1 pivot, above R4 or below S4, always anticipate a breakout. So when a first 5 minutes candle is broken, I was telling you, usually yesterday it broke, it went up. This is how market works. It tries to pull back and then goes down. And you can see this H5, Camarilla pivots captures the pullbacks level pretty neat. So here it comes, faces resistance. The moment you see a red candle, you should have entered because H4 and L5 below is always a range breakout. So here when it comes, the second attempt, first attempt failed, second attempt, it comes below that, fails, and then this attempt, the short pullback with 3 red bars, this should have taken the price down. Remember, I have told you whenever price comes closer to the range, forms the sideway and then breaks, market can take the price up like this. So market will not go in one straight line, always a zigzag. So this momentum was what which made price to go up, because this was the supply area, exact same area. Buyers came, bought and went up. Understand how you can mix these two knowledge of supply, demand and pivots. Now here, 3 candles, big green bar, then sideway. Then you get one big red bar testing the low. Again, you see bias. So this one green candle was broken by small 4 green red candles, but after that you see wick to body engulfing candle. So this was a sign, because till here it was, you need to consider testing. If there was any strong momentum with the bias who had lot of orders, see these pullbacks did not come here to test the range. They are here only, which means some retailers or somebody was trying to push the price down, but they failed to push it down because they did not have enough energy. The buyers kept buying here. Whatever supply we had here, it became a demand here. Hence, price went up. This wick to body was your key. And before that, the sideway market. So here, when you see this below, this should be your stop loss and you need to take the risk. Suppose if you have taken the risk here, price was around 39, 40 rupees after this candle. From 40 rupees, it went up to 130, 140, I don't know, 100 points. 500 quantity is 50,000 in Nifty. Hope this helped. Please do encourage, subscribe, comments, and please bring in more viewers. We will keep sharing more knowledge. I'll bring in more videos on price action exclusively, where we can analyze different stocks. Thank you. Have a good day. Good luck tomorrow.